Hello everyone, this is Ryan Mallory for SharePlanner.com. Today is September 22nd, 2011, bringing a market recap and outlook video to you guys. I was actually away from the market today for most of the day. I was tracking it on my iPhone, but I had some family matters that I had to pertain to, which is a rarity, and usually it got to be pretty important to pull me away from a market on any given day, but nonetheless I had to for most of the day. But I actually did place two trades. Yeah, I got out of one trade, PCYC, which ironically was like one of the few out of a million stocks that happened to finish up on the day in an impressive fashion, of 1.3% when the market's down well over 3%. So this stock here, for obvious reasons, was trying to get in on the breakout. The market bounces tomorrow. Look for me to try to get back in at around 12, 14, I would probably say. Maybe a little bit high. Yeah, I'd probably get in around 12.15 on this stock. Got out right at the open this morning at around 12.60 or 11.62. Basically because I wasn't going to roll the dice on what this stock could do. I've seen too many of these types of plays when the market really hits hard. When you hold the stock overnight, these things just get crushed, 10, 12%. So holding this thing throughout the day really wasn't an option to me. It was below my stop loss anyways, and I'm not too upset about it running after I got out, because the chances of that having happened was probably 1 in 100, if not more than that. So it just happened to be that PCUIC defied the odds today. But simple risk management would have told you, don't roll the dice on a play doing that, because 99 out of 100 did not do that today. Then I got into TZA. The best way to look at this is on the 5-minute candles. Jumped in, got in around this down candle here. Saw this big hammer here, and then added a little bit more to my position here on this Morningstar formation, and from there it just kept on going lower and lower and lower on the day, and I was able to benefit nicely from that. So every time I pulled back to this trend line, if you just reloaded, there was gains to be made on 1, 2, 3 more occasions. So I wasn't following it too closely. I just had that hunch, I guess, that the market was probably going to go down the entire day. So I bought TZA and just checked back in on it frequently throughout my day away from the market. So I got out at about 56.40, and on this nice little blip higher there, and ended up having a pretty good trade off of it. So I made about 5-6%, and that was basically it for me today. A very light day of trading. Didn't make a whole lot on the portfolio. I think at the end of the day I made about 0.5% on the portfolio, which I'm not complaining, considering the fact that the market was down by a whole heck of a lot more. But let's go to the main thing. This is what the market video is about, and that is the S&P 500. So we've been tracking this bear flag pattern forever, it seems like now, and it never seemed like we were going to get any momentum to this downside here. In fact, it was reminding a lot of us of what we saw here in summer of last year, where the market just really had a hard time dipping below that 1040 level. Here is more of a rising support level, not a horizontal support level, but nonetheless we finally got that breakthrough off of the lead up to, or the following after Bernanke's comments, and then today we just opened up drastically lower. And basically the concerns are over the whole European mess. But where do we go from here? I think that it's very possible that we do see a bounce in the tomorrow or Monday. I'm not too crazy. And you look at Fridays and you think to yourself, it's just not been a day where you have seen a lot of bullish moves by the market. So you could see some continuation tomorrow. You had a rally into the close, albeit a small one in comparison to how the rest of the day acted, but nonetheless, though, we went from about 11.14, which was the session lows, as high as 11.31, but around 1129. It's about a 15-point rally off the lows, which is impressive, but doesn't really improve the picture from more of a 2 to 3 week outlook. So, and a lot of my indicators too, I know we're starting to look close to being oversold here over the last 3 days of what we've seen from the market. However, we're not there yet, and tomorrow is a day of reckoning for the markets. We're about 28 points, 27 points away from testing the August 9th lows, and if that doesn't hold, then I think we're going straight to 1040. I think there will be a lot of panic in the market at that point if we can close below the 1100 mark, and once that happens, all bets are off. But the most logical support level thereafter is 1040. So keep an eye on that level there, and let's look over a few charts. Well, let's look at the weekly chart in the S&P, see if things look any different. You can see the bear flag does show up quite nicely over the last 6 weeks on the S&P. Got confirmation of a break down in that as well today. Volume very strong today as well. What I also find interesting too is that back on Tuesday when we were moving higher throughout the day, is we tested that 50-day moving average, and that ended up being the high of this little march up. And since then we've just done nothing but selling. So we're about the last 14.5 hours of trading in the markets. That goes back to the last hour and a half trading on Tuesday. We have gone from a high of 1220 all the way down to 1129. So about a 90-point drop within 14.5 hours. That, any way you slice it, is a drastic move. And at one point we were down over 106 points within the last 14.5 hours of trading. So by any measure, that is definitely a drastic move. So there's really, I mean, I could tell you, like I already have, we got supported at the 1101 level, but to tell you where this thing's going to end at, I'm not sure. I still think we'll probably see more follow through in the days ahead, maybe even again tomorrow. I don't think a bounce is a sure thing, but considering how far we've dropped in the last 3 days, I wouldn't put it out of the realm of possibilities. So I'm 100% cash, and I would urge you to be very cautious going into tomorrow. I wouldn't get too heavy to the short side. In fact, if we gap lower, I would use that as an opportunity to probably get out of some short positions. If we get higher and you have long positions, I would probably use that as an opportunity to probably do the same thing, get out of the long positions. Very tricky market when it sells off this hard. You don't want to put too much faith into the upside, but then a lot of the easy money has been made to the short side, so trying to get new established positions at these price levels is a bit insane by some measures. Alright, so let's look at some of the commodities. Huge commodity sell-off today. Gold, you can see here that it's tracked this 50-day moving average quite nicely, not dipping below it too much. You dip below it here earlier in the year, and then again in early July, and today we closed below the 50-day moving average, all in one quick move. So we're at 169 on GLD. Some people will probably play it for the bounce, considering that we got a doji off of it. If I'm going to play gold, I'm probably looking for more of a move down to this trend line here before I jump into it. So tomorrow, for me to get into gold, which is a possibility in the days ahead for me, I would need to see it drop down to like 154, 155 before pulling the trigger on that. And looking at the weekly, you can see that my chart holds even more relevance. Going all the way back to essentially November 08, this trend line has been very strong and very dependable. So if it gets back to those levels again, I will be a buyer of gold. Let's go ahead and take a look at the chart on silver. As you can see here, the most significant thing popping out to me is the fact that it's closed below the 200-day moving average. And if you look back far enough, it's been since August of 2010 since the last time it did as much. Actually, July of 2010. So this is a pretty significant development, and back at that time it was essentially basing it. It wasn't finishing off a significant trend or a move or anything. This is a major move where it never even got below it, not even when the stock went from, or the commodity went from around $50 an ounce all the way down to, $31, $32 an ounce. And for quite some time now, it's been trading in a very orderly fashion inside this ascending channel here. But now it's out of it. It's got a support level next to test around 32.50 or so. If it breaks through that, then you got to watch what it does at 32 flat. After that, you could see some support at 30, and then thereafter at 26. So silver is definitely a broken chart in my opinion. Mainly for the fact that it broke out of this ascending channel pattern and did so in dramatic fashion, broke below the 200-day moving average, which we already went over is not something that it has done at all of late. So this could be signaling the end for this commodity, and a lot of people who endured this crash here and then hung around for this move higher, it's probably going to have a lot less patience this go around. Hey, Netflix, which actually, is anybody surprised by the fact that Netflix is trading in the green today? It only finished up 0.02% higher, but for the most part was trading significantly higher at some parts during the day. I mean, as you can see here, it got up to 132, so about $4 from where it closed. But technically, what I find very interesting is that 2 days in a row now it has tested the 61.8% pullback level, the Fibonacci retracement level, and it has held it. So the question becomes, is that the bottom of this huge decline? It's gone from 208 down to 128 in a matter of 1, 2, 3, 4, 5 days. All right, that is huge, especially for a stock this big. Yeah, the CEO screwed it up, but still they got subscribers and they are still mailing out DVDs. So despite all the crap that they're going through, they're still a company that has a product which there is a demand for, even though it might be diminishing and even though there might be some competition. Still a product, still a great name, in the tech world. I guess I should be careful about calling it a great name because of the decline that we've gone. But there are some reports that they could be bought out by Amazon. Which actually would be a fabulous acquisition for Amazon. I think they could probably do a better job running the business than its co-founders that are currently running Netflix. But they would probably be able to get the rates back lower to what people expect it to be at. But as you can see here, it's very oversold. That 61.8% retracement level, though, man, that is a significant level that it's being measured against. So I gotta tell you, I'm tempted to pull the trigger on that sucker tomorrow morning. I can't believe I'm saying that, but if you look at the weekly chart, you will see, and remember this is a logarithmic scale, it's gone from 15 all the way up to about 304, and 126 is that retracement level. This rally began all the way back in September of 07. So this is a very powerful trend line and a very powerful retracement. So I do think there is a lot of validity in this 61.8% level. May look at some options tomorrow on that to see what we got. So anyways, that's going to be the market wrap-up video for tonight. Be very cautious out there tomorrow, both to the long and the short side. Could see further weakness in the markets tomorrow, especially if some major news comes out of Europe tonight. But nonetheless, I would let the market give you the opportunities. Don't try to force it. Don't try to predict it. Let the market hand them to you. So take what only it'll give you. All right. That's going to do it. Y'all have a great evening, and be sure to join us in the chat room. Join the trading network where there's lots of traders interacting daily with each other and posting trades all throughout the market sessions each and every day. So long.